All right, stock market analysis and projections on the S&P 500. First, read this important information. It tells you about our approach to the markets and what that means to you as you use our information. Very important information. But before we get to the stock market, this is what so many people have been waiting for, and we get emails on this. When is your cycle analysis workshop special going to come? Well, this is it. And we're going to offer this special a little bit differently than we ever have before. You're going to learn my method of analysis, which has been taken on by the other experts in our askSlim team. And this is what I have developed over nearly 50 years in the market. It took me a couple of years to write this and over 6 months to produce, and we keep adding to it. There's 24 video modules, plus many tools for text videos connected to this. You're going to have weeks and weeks of viewing to do, and you're going to learn so much about cycle analysis and the markets. This is online lifetime access. You invest in this, there's no special platform required. You're just going to be able to watch the videos and learn. And you're never going to look at charts the same as you did before. This is going to improve your directional decisions and your projections in both time and price, as you see us doing here on the team in our big universe of stocks, ETFs, and futures that we look at, plus a bonus that we have never offered before. I read The Profit Magic of Stock Transaction Timing, the Bible written by JM Hurst almost 50 years ago. And the work has evolved from the work he has done. And you've seen the quality of the analysis we bring. Well, I have, over this last years, looked for these things to be available because this book has been out of print for decades. And I keep buying used books when I see them available. We're going to give the first 25 people that invest in the Cycle Analysis Workshop a copy of this book. Now, some of them they're all used, and they're, figure 30, 40, 50 years old. So they're not perfect looking books, but it's been hard to get them, and I've done what I could to collect them. So we're going to send you one of these books for subscribing to this workshop. Also, as a bonus that we have never done before, we are going to give a 30-minute trading session to everybody that does sign up for this workshop, and a member of the askSlim analytical team will be able to meet with you for 30 minutes and answer your questions and help you with looking at some of the analysis you've done, or maybe doing some teaching around part of cycle analysis. Both of these bonuses are worth $400, and we're giving $400 off. So the special is $400 off just $897 for this amazing workshop. Literally, you could pay $5,000 for something like this somewhere else, but we don't want to do that. We really want you to learn. $897, and the first 25 are going to get a copy of this book. Go to the top of askSlim.com and watch the video that's in the workshop section, or just sign up. On the workshop tab, you'll see the ability to watch a video that gives you some idea on what cycle analysis is about. That's free, or you could just sign up. $897. Questions, write to Matt at askSlim.com. Don't miss the opportunity to get one of these books. So hurry up. First 25 gets it. That's it. Cycle Analysis Workshop. Go there right now. Okay, here we go. Stock market analysis, S&P 500. We're going to do weekly and daily analysis, and you're going to see how the stock market has acted right in line with what our expectations were. Then we'll also look at some of our proprietary studies. We'll look at the Slim Ribbon, the Slim Ribbon PO, and the OBI, and you'll get a sense for what the information is that we're getting now in the stock market. Let's start right now looking at the S&P 500. So this is the SPX chart, and we're looking at a weekly on the left and a daily on the right. I'm going to blow up this weekly chart right here and look at this amazing, huge upside week that you see right over there. I mean, 6% up is a huge gain. And look where it is right now, right on that 50% retracement level, right in between this darker red and the lighter red. So this is the 38.2, the 50, the 61.8, and the 78.6. 78.6 is a big number up here, up around 4,500 if it would be able to get there. We thought that this rally would get up, but I didn't think the first week would get it there, you know, up to the 43.50 area, but here we are right now. So our analysis showed that the period of August through October was a period of risk. And that is exactly what happened. We projected that it would move down to 4,200 to potentially 4,110, the low right over here around 4,100, and then a massive rebound right in here. On the bottom are the cycle brackets. Now, there are several key things to look at in here that I think are very important. First of all, the black cycle bracket, that's the one we want to look at first. And that is giving us a sense that there was that key low right in there. There's also this minor blue one right over there, and that is giving you a sense that the market was in a declining phase with both of these cycles right over here. So that was our period of risk right in there. Now, there's also this out of phase blue cycle right in here. And if you look where the low was here and the low was here, and this low right over here, that's important, especially since the trough in here bottoms out here in line with FEZ and FXI, the China market barely rallying, the European market getting a rally, but a lot of risk out over here when we look at that. So this is the FXI and the FEZ right there, and those tell you on those cycle brackets the timing for these troughs right in there. That could mean that while we're getting a big upside pop right in here, that there is still periods out over here that the stock market's going to have trouble. And that's why in the beginning of the show, I talked about the potential for chop in the markets, and that is what we see right now. So the big upside move, and then more, I think, chop coming out over here with a potential for a pretty sizable pullback out over here, maybe in December and into early January. But right now, we want to look at how it acts in these resistance areas. You can see these upward projections right over here, which is to around 4412 up here to 4500 right there, are what are reasonable projections over coming months as we look out over here into the late winter and spring. So if we get some choppy action in here, there's certainly, I think, going to be buying opportunities looking at that. Now, let's switch over and look at the daily chart right over here. And you can see as it's got up here to that major 50%, here are your cycle patterns, and right in here that you see, this is where we were looking for the alignment of the Russell, that's the green dash right over there, that was telling us this was a very key area, both in time and price, for the bottom to be made. And this upside launch that we had in here is not something that I saw coming, though I did see the bottom timing as we have right over here. Now, I want you to note that this little blue arrow is important because on the Slim Ribbon PO, and I'll show you another version of that, it's telling you that the momentum has now improved enough to be neutral in the stock market. In other words, the negative momentum that you saw here, and this is the Slim Ribbon telling you about that right there, has now neutralized. Now, if I go back to the weekly, you could see the reversal scout, which is right here on the weekly, has not turned up yet. And when you get under those conditions where you get upside moves that, it hasn't turned up yet, you could get into choppy action. You see that right over here where it had a big rally early in that cycle and then had quite a pullback right over there to support. you could get that to be happening in here. So let's go back to the daily for a second. And were it to peak somewhere in this area, then we would expect a pullback sometime in the next few weeks to maybe about 42.50. This is 42.30, somewhere in there before it then would be picking up again. So looks like potential for more upside in here, but not a lot. This peak right over here is very important because that really confirms the intermediate bottom, and that peak was right on that level right over there, which was about 43.93, and we're not all that far from it. We're just coming up through this 78.6% repair level. So I left that in there for you to see. That's very important, as that is telling us that the probabilities are high that a very important bottom has been made in the stock market. You see that period of risk that we've had labeled in there? The last 3 weeks of October, man, that was just absolutely beautiful, spot on. And now we have a much better condition in the stock market, as you see the weekly having turned up over here, the daily having turned up over here, and the market conditions beginning to improve. Let's talk about those market conditions. This is the S&P 500 as we look at it on the daily chart, which shows the slim ribbon on an area chart. This really gives you a good look at what the conditions are for momentum, and we were negative and now turning neutral right there. Look at that option bias indicator on the bottom where this turned orange. When it does that, it tells you about an extreme and a bottom warning, and that nailed it. So it's hard to see, but this is now turned yellow. So that is a condition of that's neutral again after being extremely oversold and warning us that the stock market was going to make a bottom at the timing that we expected, which is what we got. So very strong market when we look at that, and conditions are such that pullbacks are very likely to be met with buying coming in, and we expect those to happen because the markets just don't run away as we see right now without having some back and fill. But again, a bull market that we're seeing now has been restored and likely to be in a bullish condition for many weeks ahead, even though we expect that there will be a lot of chop in the market.